The Hanging Man Candlestick pattern is often used to identify potential changes in a market from an uptrend to a downtrend. In this video, I'll show you what it looks like and then outline how the TradeOxy platform calculates it for our scanners. The Hanging Man Candlestick chart pattern is a single candlestick chart pattern. It's identified by having an open and close that are relatively close together, along with a really small top wick. Finally, the bottom wick is quite large. Now that you know what it looks like, I'll show you how we calculate it here on TradeOxy. First, we have a look at the body of the candlestick and make sure that it's no more than 20% of the candlestick size. We then have a look at the top wick and make sure that it's no more than 20% of the body size. Finally, the lower wick must be at least 200% larger than the body, indicating a relatively large size compared to the body. The combination of these factors gives a unique shape of this particular pattern. The theory behind this candlestick pattern is that it occurs after a long uptrend, and it demonstrates that the market is potentially starting to shift towards a downturn. With the TradeOxy platform, you're able to identify the Hanging Man Candlestick chart pattern at scale across multiple different asset classes. We track US stocks, cryptocurrencies, and foreign exchange, and you can identify this pattern across all of them. Remember, all trading is at your own